BlackRock Greater Europe Investment Trust is managed by Stefan Gries since June 2017, and Brian Hall, who was appointed as co-manager in November 2025 following a prolonged period of quality growth headwinds. Hall has a quality value focus, and the board believes the ability to take a more balanced approach should help dampen the trust's volatility and enhance shareholder returns. There are no changes to the company's investment objective and policy, and quality value stocks will likely make up to 20% of the portfolio. The managers aim to generate capital growth from a portfolio of European ex-UK companies, with around 80% of the fund held in large-cap companies and the balance in small and mid-sized businesses. When required, the managers can draw on the deep resources of the BlackRock Fundamental European Equity team, which has around 20 highly experienced investment professionals. The trust is a high-conviction, low-turnover fund. It has a broad remit as Gries and Hall can invest in developed, but also in emerging European markets, up to 25% of the fund, when attractive opportunities are identified. Stocks are selected on a bottom-up basis following thorough fundamental research on both companies and the industries in which they operate. The managers believe it is important to understand the factors that influence a company's share price and what the stock market is anticipating or may be missing. Because they seek the best businesses that are based in Europe, Gries and Hall suggest that investors do not have to have a positive view on the economy to consider the trust. There are 4 primary investment criteria when assessing a potential quality growth company to add to the portfolio. A unique aspect, such as a product, brand or contract structure, that provides the potential for consistent attractive returns, options to deploy cash in areas of high and sustainable returns, a high and predictable return on capital and strong free cash flow conversion, and a quality management team with a clearly defined strategy and a strong track record of value creation. Gearing of up to 15% of net asset value is permitted, with the typical range being net gearing of 5 to 8%. The managers do not try to time stock market moves. The trust's level of gearing is rather driven by the availability of opportunities to add to the fund's existing holdings or to introduce new names into the portfolio. The managers take a long-term approach, avoiding short-term stock market noise. They consider themselves investors in businesses, rather than traders in shares. Understandably, portfolio turnover is low, generally around 20% a year, which implies a 5-year holding period. The trust has a relatively concentrated portfolio of between 35 and 45 high-quality European equities, with the top 10 holdings making up around half of the fund. Areas represented in the portfolio include industrial companies that are benefiting from their customers' higher capex spend, hard rather than soft luxury goods companies, and aerospace and defense businesses. There are no constraints on sector exposure, and Gries and Hall are benchmark agnostic. This is illustrated by some of the 11 market sectors not being represented in the portfolio, where the businesses generally do not meet the manager's quality investment criteria. The trust has outperformed the Europe ex-UK market over the long term, although quality growth headwinds in recent years have made performance more challenging. Although the investment objective is capital growth rather than income, the trust makes regular semi-annual dividend payments. The annual distribution has grown for 19 consecutive years since the company was launched, bringing it close to the 20 years required to become an AIC dividend hero. If you would like to learn more about BlackRock Greater Europe Investment Trust, please visit Edison Group website.